Welcome back to XRP Update, your trusted source for the latest XRP news, institutional developments, and the future of digital finance. Today we're going to discuss something that goes far beyond charts, price predictions, or daily market volatility. In fact, what we're talking about today is a perspective that could completely change the way many people look at XRP and the digital asset industry as a whole. Every day, millions of investors check the market hoping to see green candles. But very few stop and ask themselves a much bigger question. What if we're witnessing the early stages of one of the greatest financial transformations in modern history? Throughout history, massive fortunes were rarely created because people bought at the perfect price. They were created because a small group of people recognized a revolutionary shift before the rest of the world understood what was happening. That's exactly why today's discussion is so important. Because whether you agree or disagree with the bullish outlook surrounding XRP, the bigger picture deserves serious attention. Let's start by looking at something that many investors never think about, the XRP rich list. On the surface, it simply looks like a ranking of wallet balances, but when you dig deeper, it tells a much bigger story. There are only a tiny number of accounts holding extremely large amounts of XRP compared to the millions of participants across the ecosystem. That immediately raises an interesting question. If XRP eventually becomes a critical piece of future financial infrastructure, what could ownership of significant amounts actually represent? Throughout history, ownership of infrastructure has always created extraordinary wealth. The people who owned railroads, oil pipelines, telecommunications networks, and internet platforms weren't simply investing in companies. They were investing in systems that society eventually depended on. Many XRP supporters believe blockchain infrastructure could become the next chapter in that story. Whether that prediction becomes reality remains to be seen, but the comparison itself explains why long-term holders continue to stay focused despite market volatility. When historians talk about the Industrial Revolution, they often mention names like John D. Rockefeller, Andrew Carnegie, Cornelius Vanderbilt, J.P. Morgan, and Henry Ford. These individuals didn't become legendary because they guessed the market correctly for a few months. They built or controlled infrastructure that transformed entire economies. Railroads connected cities, steel built nations, and oil fueled industrial expansion. Looking back, it seems obvious why they became enormously wealthy, but at the time, many people doubted them and questioned whether those industries would truly dominate the future. Today, blockchain technology may be experiencing a similar phase. The public often focuses on price speculation, while institutions increasingly focus on infrastructure. That difference in perspective may explain why some investors remain confident during periods when the broader market appears uncertain or even pessimistic. History also teaches us another fascinating lesson. Some of the greatest fortunes were built during periods of fear rather than periods of excitement. During financial crises, many investors panic and sell valuable assets because uncertainty becomes overwhelming. Meanwhile, experienced builders and long-term thinkers often see those same moments as opportunities. The Panic of 1873, one of the most significant economic downturns in American history, caused countless businesses to fail and financial markets to suffer enormous losses. Yet many industrial leaders used those difficult conditions to acquire assets at discounted prices, strengthen their positions, and ultimately build empires that lasted generations. The lesson wasn't that downturns are enjoyable. The lesson was that perspective determines opportunity. The people focused only on today's headlines saw disaster, while those focused on the next 20 years saw possibility. Now think about today's digital asset market. Every cycle follows a familiar pattern. When prices rise, excitement dominates social media, mainstream news outlets suddenly become interested, and new investors rush into the market. But when prices decline, sentiment changes completely. Fear replaces optimism, criticism replaces enthusiasm, and many begin questioning whether the technology has any future at all. Ironically, experienced investors often pay the closest attention during these moments because they understand that emotional markets frequently create long-term opportunities. That doesn't guarantee success, and every investment carries risk, but history repeatedly shows that innovation often progresses quietly while public attention fades. Some of the biggest technological revolutions developed during periods when very few people were paying attention. Perhaps the most important takeaway is that successful investing has rarely been about overnight riches. People love hearing stories about someone becoming wealthy in a short period of time, but they usually ignore the years of research, patience, uncertainty, and conviction that came beforehand. Many of today's successful technology companies experienced years of skepticism before achieving mainstream adoption. Blockchain technology could follow a similar path, where the greatest rewards, if they come at all, belong to those who understand the underlying infrastructure rather than simply chasing short-term price movements. This is why discussions surrounding XRP increasingly focus on utility, institutional adoption, tokenization, and the future of finance instead of daily market fluctuations. And as we'll explore next, that's where the story becomes even more fascinating, because the biggest developments may not be happening on trading charts at all. They may be happening behind the scenes as the financial world prepares for its next major transformation. The conversation becomes even more interesting when we shift our attention from individual investors to institutions. Large financial organizations do not make billion-dollar decisions based on hype or social media trends. They study infrastructure, efficiency, scalability, regulation, and long-term utility. This is exactly why so many developments surrounding the XRP ledger deserve attention. For years, the network has demonstrated the ability to settle transactions within seconds while maintaining extremely low costs compared to many traditional systems. But payments alone may only be the beginning. Around the world, banks, asset managers, and technology companies are exploring how blockchain can transform lending, settlements, tokenization, and the movement of value. The real competition may not be between cryptocurrencies themselves, but between the financial infrastructures of tomorrow. Whoever provides the most efficient rails for moving and managing value could become a critical part of the next generation economy. Another major topic that is rapidly gaining momentum is tokenization. This word is mentioned more frequently every year because it represents the possibility of bringing traditional financial assets onto blockchain networks. Imagine stocks, bonds, treasury products, real estate, and even investment funds existing in digital form with near-instant settlement instead of waiting through outdated processes. Some industry forecasts estimate that tokenized assets could reach trillions of dollars over the next several years. Whether those estimates prove conservative or ambitious remains to be seen, but the direction of travel is clear. The world's largest financial institutions are spending enormous resources researching blockchain infrastructure because they recognize that efficiency creates competitive advantages. If value begins moving with the same speed that information moves across the internet, the institutions prepared for that transition could benefit tremendously. This is why many XRP supporters focus less on daily volatility and more on long-term utility. Markets are emotional, but infrastructure is practical. The average investor may watch a one-day price movement and become discouraged, while major organizations may spend years preparing systems that are intended to operate for decades. Throughout history, technological revolutions have often looked unimpressive during their early stages because adoption happened gradually before accelerating. The internet didn't transform global commerce overnight, and smartphones didn't replace traditional devices in a single year. Instead, improvements accumulated until society reached a tipping point where change happened rapidly. Blockchain technology may be following a similar path. Every improvement in settlement speed, compliance capabilities, institutional partnerships, or real-world applications adds another brick to a much larger foundation that is still being built. Market psychology provides another lesson worth remembering. Many experienced investors often repeat a simple principle. When fear reaches its highest level, opportunity may be quietly increasing. During periods of maximum excitement, risk can become hidden because everyone expects prices to continue rising forever. During periods of maximum pessimism, valuable assets are sometimes overlooked simply because negative sentiment dominates the conversation. That doesn't guarantee future success, but history repeatedly demonstrates that emotional extremes rarely last forever. Long-term investors therefore spend significant time studying fundamentals rather than headlines. They ask whether adoption is growing, whether institutions are participating, and whether the technology continues improving regardless of short-term market conditions. Those questions often matter far more than what happened during the previous week of trading. Now consider another enormous transformation taking place simultaneously: artificial intelligence. AI is rapidly changing how businesses operate, how decisions are made, and how data is analyzed. In the future, AI agents may negotiate contracts, manage portfolios, optimize supply chains, and execute financial transactions automatically. But those intelligent systems will also require infrastructure capable of transferring value securely and efficiently. Information already travels around the world almost instantly through the internet. The next challenge is enabling value to move with similar speed and reliability. This is where blockchain technology enters the discussion. A future where software communicates with software, executes transactions, verifies identity, and settles payments in real time could fundamentally reshape global commerce. The convergence of AI and blockchain may therefore become one of the defining technological stories of the next decade. And understanding that possibility helps explain why many investors continue looking beyond today's price charts toward tomorrow's digital economy. As we zoom out and examine the bigger picture, another trend begins to emerge. Financial technology is no longer evolving in separate directions. Artificial intelligence, blockchain, digital identity, tokenization, instant payments, and super apps are all moving toward the same destination. Around the world, technology companies are trying to create ecosystems where users can message, shop, invest, borrow, save, and make payments without ever leaving a single application. Instead of downloading dozens of different apps, the future may revolve around one integrated financial platform that manages every aspect of daily life. Building that kind of ecosystem requires much more than a payment button. It requires secure identity systems, digital wallets, compliance infrastructure, settlement networks, and distributed ledgers capable of recording transactions instantly. Whether XRP ultimately becomes one of the technologies powering that future remains uncertain, but the direction of innovation clearly suggests that the next generation of finance will be far more connected and automated than the system we use today. This is also why so many discussions now include artificial intelligence acting as financial agents. Imagine a future where your AI assistant automatically pays your bills, manages your investments, negotiates prices, books travel, purchases insurance, and even optimizes your taxes based on rules you approve. That type of economy would require value to move just as quickly as information moves across the internet today. Human beings may no longer initiate every transaction manually. Instead, software could communicate with software while blockchain networks provide the trust layer underneath. If that vision becomes reality, then the demand for secure, scalable, and efficient financial infrastructure could increase dramatically. Many people focus only on today's cryptocurrency prices, while others are trying to understand how digital assets might fit into a much larger technological revolution involving AI, automation, and global digital commerce. Another lesson history teaches is that transformative technologies often face resistance before achieving widespread adoption. The automobile replaced horses, but not overnight. The internet changed commerce, but many businesses initially dismissed it. Smartphones transformed communication, yet few predicted how dependent society would become on them. Every revolutionary technology experiences skepticism because people naturally compare the future to the present, rather than imagining entirely new possibilities. Blockchain may be experiencing the same pattern. Critics focus on volatility and speculation, while supporters focus on infrastructure and long-term utility. Time will ultimately determine which expectations prove accurate, but history suggests that innovation frequently moves faster than public perception. Those who understand emerging technology early often spend years waiting while others dismiss the opportunity, only to watch adoption accelerate when practical use cases finally become impossible to ignore. At the same time, long-term investors should remember that protecting wealth is just as important as creating it. Digital assets represent a new form of ownership, and security must remain a priority. Strong custody solutions, multi-factor authentication, careful planning, and disciplined risk management are essential for anyone participating in this rapidly evolving industry. The goal should never be chasing unrealistic overnight riches, but understanding technology, managing risk responsibly, and thinking strategically about the future. Markets will continue experiencing cycles of optimism and fear, but preparation and education remain timeless advantages regardless of market conditions. Investors who stay informed are generally better positioned to navigate uncertainty than those driven purely by emotion or headlines. Ultimately, the real story may not be about a single price target or one market cycle. It may be about the transformation of the global financial system itself. Digital assets, tokenized real-world assets, artificial intelligence, and instant settlement technologies are all developing simultaneously, creating possibilities that would have sounded impossible only a decade ago. Whether XRP becomes one of the dominant pieces of that infrastructure or follows a different path will depend on adoption, regulation, innovation, and countless other factors. But one thing is becoming increasingly difficult to ignore. The conversation has evolved far beyond speculation. It is now about the future architecture of finance. Thank you for watching XRP Update. If you enjoyed this analysis, make sure to subscribe, turn on notifications, and share this video with friends and family who want to stay informed about XRP and the rapidly changing world of digital finance. As always, this content is intended for educational and informational purposes only and should not be considered financial or investment advice. Always conduct your own research before making any investment decisions. Until next time, stay informed, stay patient, and we'll see you in the next XRP update.